one of the big questions this time. Will the government rein in on the rising fiscal deficit, or is it best left unattended for now? We take a closer look at this with backstage reformer and former Planning Commission Deputy Chairman Montek Singh Ahluwalia.
We have on the show for you another very eminent economist, Dr. Montek Singh Ahluwalia, former Deputy Chairman of the Planning Commission of India. Montek, very nice to have you on the show today. And I want to begin by asking you about this K-shaped recovery, which has now become common parlance. Should the Finance Minister be making her peace with the fact that it will remain K-shaped, or do we need to do something to change the shape of that alphabet, given how badly the bottom end of the pyramid is hurting?
Let me first thank you for inviting me to join your show. On the specific question that you ask, you're right that there's been a lot of focus on the fact that the economy is recovering. The fact that it's recovering is certainly a good thing, though it's not unexpected, because, we were very badly hit by the pandemic. So having gone down probably more than most other countries, it's not surprising that we have seemingly recovered. As you say, the recovery is not uniform across all segments, neither sectors nor, if you like, income groups. And I subscribe to the view that what you're seeing is a recovery, but it is K-shaped. The question you now ask is, should the finance minister worry about that? Well, clearly anything that doesn't bring the benefits of a recovery to large numbers of people, especially at the lower end of the spectrum, has to be a cause of concern. But what exactly she can do about it in the short run is another issue. Because as far as the recovery is concerned, the year is almost over. So really the question is, what should she be doing in next year or in the budget for the next year? But to some extent, what should she be doing for the remaining couple of months? My view on this has been always that given that we were hit by a recovery, in the short run, a worsening of the fiscal deficit compared to what was expected not be a problem. We had apparently projected a fiscal deficit of about 6.8% of GDP. That was based on, an outcome projection of growth which is probably not going to be realized. So in the remaining months of the year, I personally think that rather than being too hung up on hitting that 6.8% target, she can actually afford to do a certain amount of expenditure, which actually would help the economy. Now, in this list of things to be done, to my mind, one of the most important really is to make up the transfer that is due to the states because of the shortfall on the GST compensation. Because, there's far too much focus in our discussions on the central government fiscal deficit, whereas really from a macroeconomic point of view, the deficit that matters is the combined deficit of the center and the states. Now, the states have not been given the shortfall in the GST which they were originally promised. Many of them are therefore running very large fiscal deficits. Some of them, by the way, may not be showing the fiscal deficits because they're just delaying expenditure. And that is actually contributing to the slowdown in the economy because bills are not being paid, etc. So I think that for this year, I don't think it's that important to stick with the 6.8% that was originally targeted. If the growth rate that we are achieving is actually less than what we had originally anticipated, so you can in fact justify a somewhat bigger deficit. And probably the areas she should concentrate on, as far as the current year is concerned, is either make the transfers that are due to the states for the GST compensation. And I don't know, by the way, what has been the final position taken by the government on whether we are going to make that transfer or not. But to my mind, it was clearly promised, and therefore it's worth taking a step forward in that direction. She started the business of transparency by bringing things onto the deficit which earlier were left out. But actually, there's quite a lot which is still outside, like the GST compensation that I mentioned. So I think it's a good opportunity to say, well, look, it's been a bad year. We've recovered not as much as we had expected. And so if the fiscal deficit is a little higher than 6.8%, I don't think that matters too much for the current year. Now, it's a different issue what she's going to do
Right.
for the next year. And I mean, that is very directly
That's
connected with what sort of a growth expectation she has for the next year. And you know, on that, people have very different perceptions. I mean, we should not be mistaken
right.
by the fact that we have probably end up with a growth rate maybe somewhere between 2.5% current year, but that doesn't mean that's going to continue next year. So really, we need to know what is the government's own expectation of what the next year's growth rate is going to be, because the budget has to be structured around that.
Fair point. But whatever that growth rate may be, Montek, I want to ask you what your prescription would be for next year in any case. Given the need for transferring the GST compensation to the states for this year, next year, if the government's assessment is that growth will not be as strong arithmetically or optically as this year, what needs to be done? Because one route is to try and stimulate consumption at the bottom end of the pyramid in some way. The other way is to throw your money at the investment basket and try and stimulate the economy that way. What would you advocate?
Well, you know, we are already doing things to support the income levels at the bottom, and those should certainly continue. I mean, for example, the MNREGA expenditure, which is actually demand for rural employment programs has been much stronger than was projected. So I think we should allow for that fully under the nature of the legal provisions of MNREGA. That is in fact an automatic entitlement, and next year's budget should allow for that. You know, otherwise, quite frankly, I think the notion of repeating consumption, something that would lead to a recovery, is I think a little misleading, because you know consumption will recover when incomes recover. So there is a case for doing something for the poor, and we should certainly do that. But any other stimulus of demand, in my view, should go in two areas. One is to strengthen health expenditure. That's not actually necessarily investment, because a lot of it may well mean supporting expansion in health services, certainly vaccinations in the coming year. But other than that, it should really be investment oriented. And if you're clear about this well in advance, and we are going to do more expenditure, that's where we should concentrate on. But you know, that decision has to be based logically on the assumption, clear assumption, that look, if we don't do it, then growth will not be what it should be. We cannot simultaneously claim that we are going to grow at 7.5% and say that we also need fiscal stimulation. So I think from an analytical point of view, what we need is a clear sense of what's going to be the growth rate without the stimulus, and that if that's not good enough, then we justify stimulus. But even there, for the next year, it is from a macro point of view, and it's not fair to throw this at the finance minister, because the central budget cannot pronounce on the states. But I think we need to be clear what is the fiscal position of the states. And the problem there is that the fiscal position of the states is not very transparent. And most of them are running much larger deficits than they show. They're simply not paying the bills. So I think to get a good sense of what the macro balance should be, we have to take a combined view of the two and then say, look, this is what you're aiming at, a combined deficit of so much. And for that, maybe it's worth saying, how much are we going to allow the states to borrow? Because after all, in that sense, the central government controls the total amount of borrowing that the states can do. And that should be added to the central deficit. So we say we are targeting a combined deficit of whatever it is.
This combined deficit number cannot be too small, as you know, Montek, and that is the rub of the problem. Because if the finance minister, as she probably will, takes your advice and says, I will not get too hassled about the fiscal deficit getting a little out of control for the near term, but on the other hand, that runs the risk of inflation actually getting even more entrenched, and that's a problem which is fairly global right now, and in India too. So would you worry about inflation this year as you talk about a looser fisc? Or would you say, let me help the economy on the fiscal front and let the Reserve Bank deal with inflation?
No, I think, look, the inflation connection is not necessarily determined just by the fiscal deficit. The inflation factor is determined by how much you monetize the deficit. I mean, if you simply, the problem with deficits is that they squeeze out the private sector, okay? So if you do more government expenditure, there's less for the private sector. If it is your judgment that private investment is not going to expand, then it makes sense to say that, look, until the private sector recovers, we are going to give a boost on government expenditure. That boost will be an investment-related government expenditure, because that is what contributes the most to the growth of the economy in the longer term. I come back to what I said. A lot of people, because they think on the demand side that consumption somehow contributes to growth, they say, well, if growth is slowed down, why don't you speed up consumption? Well, actually, consumption is an endogenous factor. I mean, an economy generates consumption when income occurs and income expands. So our focus should be on expanding income. The best way of contributing to the medium-term capacity of the economy to grow is to increase investment. And the biggest shortage in India right now is in terms of both the quantity and the quality of infrastructure. Now, that's an area where the government is deeply involved. It has had ample advance notice of what needs to be done. And if a clear decision is taken that we are going to do this much on the capex side of the budget, I think that makes a lot of sense, and we should do that. Now, the important thing in the fiscal deficit is really, if your trajectory is seen to be one where you're not bringing the fiscal deficit under control over 3 or 4 years, then I think there's a lot of cause for worry. That's why it's the medium term that matters. And the critical thing in the medium term is what's the growth rate, because that's what determines the denominator. I mean, if you get stuck with a set of policies that don't generate growth and simply say, I've got a good fiscal deficit, I don't think that that's going to impress anybody. But if you can persuade people that, listen, I'm running a little bit of a higher fiscal deficit this year, but I'm also following policies that will actually stimulate growth, I think people will perceive that in the medium term, you're making the right transition. And that's what we should be focusing on.
Now, to come back to your point about stimulating investments and this infrastructure investment that you just spoke about, Kaushik Basu last week was telling us that India needs to get back to that 38-39% kind of investment ratio which we had back in 2003 and even in 2010-11. What is your recipe for getting back to that kind of investment rate? How much would you have the central government do? And do you think these recent initiatives like the production-linked initiatives, etc., can actually draw in the private sector and get the investment level high up again?
Well, on this one, let me say that what has fallen is private investment. And that too, not corporate private investment, but non-corporate private investment. That means small-scale investment, housing, etc., and so on. Whether we go back to 38%, we're now probably somewhere around 30%, maybe a little lower. We certainly need to get back to somewhere around 34%, if not 38%. And most of that expansion really has to be in the private sector. It's the revival of the private sector. I don't believe that by concentrating on the public sector, you're going to revive the economy. But where the public sector can actually deliver infrastructure, which the rest of the economy needs, this is a good opportunity to put in a little more in there than you would later on. So as far as what to do, that's pretty clear. Now, what else is needed? I think we should recognize that looking ahead, you mentioned the production linked incentives. They I think that what we need is a clear recognition that we have to have a much better export performance. I don't actually mind a few selective production-linked incentives in critical areas, but we have 13 sectors that we've listed for production-linked incentives. I would have said that in what you might call the green energy area, or developing green hydrogen, or developing battery technology, things that in the transition to a low carbon economy the country needs, and there's a lot of technology to be brought in. Some selective support there might be a good idea. But otherwise, I think the real reason why we are not competitive in global trade, and that is preventing exports from doing as well as they could. I mean, we must remember that we are doing worse on exports than Vietnam, we're doing worse on exports than Bangladesh. And both of them are facing the same global situation. So, why is that? I personally think that the decisions that we took in the last 2 or 3 years of raising import duties were, I think the finance minister received bad advice. Uh, it may seem like a sensible thing to do to protect domestic industry, but the fact is that what the raising of import duties has done is to raise the cost structure of Indian industry. I mean, this is what the 1991 reforms made a turnaround. And several successive governments, including the government of Prime Minister Atal Bihari Vajpayee, continued the trend of reducing duties. And the principle that was followed, and I mean, Yashwant Sinha, as the finance minister, actually restated that principle, that we want to get our duties down to the same level as they are in East Asia. Now, we've reversed that. I think the government was poorly advised by whoever gave this technical advice. And I would be very happy if the finance minister were to say that, look, as far as customs duties are concerned, we have a medium term objective of bringing the rates down to the same level as exists in Southeast Asia. And to that, with that end in mind, this is what we're going to do in the current year. I mean, she doesn't have to do it all in 1 year, but the signal should be clear. The danger at present is that the signal is that if some domestic industry promises that if only you raise the import duties, then I will do well, the chances are that the government will succumb to that promise. Now, there are many distinguished economists who advised the present government who have actually said the contrary. I mean, the first chairman of Niti Aayog is Arvind Panagria, a very distinguished trade economist in Colombia. And he has categorically said that we should reverse this raising of customs duties. And more recently, the former chief economic advisor, Arvind Subramaniam, has said the same thing. So I personally think that in any outlining of tax policy, we should junk the notion that raising customs duties is a good idea, and we should put back on the agenda, how do we get back to bringing our customs duties down? Let's be clear, we are trying to join the global economy. Many people, Prime Minister himself has said that he's in favor of global value chains. We should integrate with global value chains. We cannot integrate with global value chains if we don't bring our duties down to the same level as other countries in East Asia who are actually competing with us for joining these global value chains. And I feel that, even the decision that was very unfortunate that the Commerce Ministry decided not to sign the RCEP agreement in 2019, although, I mean, it was the present Prime Minister who had put out the signal that we must act east. And that's a good slogan. But, acting east, the logical consequence of acting east would have been to join the RCEP agreement. And it would have signaled to the rest of the world that, look, if you want to locate production facilities in India in order to service other countries, then India's customs duties are going to move in line with what's happening elsewhere. See, at the moment, we may be able to attract people to produce things in India behind high customs tariffs. But this production is not going to be the basis for successful exports. And obviously, we are a moderately large market for some simple things. So it's always possible to attract people to set up production facility here. But that production facility will essentially be an assembly of imported components. And I don't think that's really the long term what we want to do. We want to develop a deeper production capability, which will link up with global value chains, and we export to fit in with other people's products in order to service the global market. That's what we need if we want to revive exports.
Let me ask you about another aspect, which is the government's asset monetization program. But last budget too, there were quite a few announcements about how 2 public sector banks will be privatized. That has not happened. Now, from your perspective and experience at the Planning Commission, why do you think it is so difficult for the government to push through some of these divestments or privatizations? Because they could actually yield very useful capital for the government to deploy in areas of investment and infrastructure.
Well, I think we need to separate out what we call asset monetization from privatization, although it might look like the same thing. At least my understanding of asset monetization was that, in the infrastructure area, we have a lot of functioning assets that are worth. These were assets that were built in the public sector. And since they are functioning and they're operational and they're generating revenues, we would be able to sell them off. And with that sale, the resources that we get hopefully could be used to build other public sector infrastructure assets. You could argue that why do you need to build it yourself? Why not let the private sector build? The answer there is that very often, when the private sector is asked to construct assets, it runs into all kinds of problems of land acquisition. Even when the land is actually with the government, there are problems of clearing, encroachments, things which are very difficult for a private sector guy to do, but much easier for the government to do. So the solution is the government builds the asset and then sells it. And the private sector maintains it and so on, either sells it or gives it on a 40-year lease or something. And the private sector essentially operates that asset and maintains it. I think there's a lot of sense in that. And I don't know why it has not succeeded as much as I would have hoped. Very often what happens is that, we announce something, but in the actual implementation of the sale, a great deal depends on the terms on which the sale is being offered. On which the asset is being offered. But I think that if we were very clear that these are the assets, and we set up a high-level team to produce a concession agreement on the basis of which the assets can be sold, we would find it easy to establish demand for the asset. Now, this requires a reasonable judgment on what kind of return you can get. If you overprice the asset, nobody will buy it. But I think that's certainly a possibility. The second thing is privatization. And in the case of the 2 banks that you talked about, the real purpose of the thing, to my mind, is an explicit recognition that as long as banks are under the administrative control of the finance ministry, they will not be able to resort to efficient banking. Now, I've been in the finance ministry, and I'm aware that ministries hate letting go of anything. But after much consideration, my view is that we should privatize a few of the public sector banks. We don't have to privatize them all. So I hope that this privatization of 2 banks actually goes through. I have no idea of where it stands or what progress has been made. I just don't know. But certainly, since it was announced, I'm not surprised, by the way, that this takes a lot of time. But it would be good to hear from the finance minister whether she now has a very clear plan of action as far as these two banks are concerned, with the terms on which they're being privatized being made very clear and bids invited so people know who's eligible to bid.
Montek, always a pleasure hearing your thoughts, but we are out of time today, so I'll leave it there. But thank you very much for taking time out today. Great to have you on the show.
Thank you. Thanks very much.